Good afternoon, everybody, and welcome to our webinar today on the key considerations for exporting in 2016. My name is Alex Peel. I'm a partner at James Cooper Preston, a firm of chartered accountants and business advisors based in London and the Thames Valley. I'm delighted today to be joined by Stuart Stoter from UK Export Finance and Tim King from the FSE Group. UK Export Finance is a government department that helps exporters by providing insurance to exporters and guarantees to banks to share the risks providing export finance. UK Export Finance provides free advice to UK companies through a regional network of 24 export finance advisors, and Stuart has over 30 years' experience in providing international trade finance and advice to businesses, working across a number of financial institutions. For 6 years, he was the Director for International Trade training at HSBC. Stuart has also worked for the CBI, which included involvement in policy areas as diverse as education, employment technology and export growth. Tim is responsible for the company's early stage debt funds, including the Thames Valley Berkshire Commercialisation Loan and Expansion Loan Funds. Tim joined the FSE Group in October 2014, having spent 35 years in banking with Barclays and Clydesdale Bank. During his career, he gained experience of all areas of business banking, plus some international trade and office administration. Tim has also spent time working for a charity that helped people start or grow their business when they could not get traditional funding. In our presentation today, we're going to be asking a couple of questions, but if you think of a question during the presentation, then you should have the ability on your screen to type that question, and then we will take questions at the end of the presentation. Before we get going properly though, it would be very useful to understand the nature of our audience today, and you should see a poll appear on your screen now with 3 possible answers. The question is, are you currently exporting? Yes, no, or no, but I plan to in the next 12 months. So if you could just start off by answering that question, then we can use that to inform our presentation to you today. Thank you. I think most people have now voted, so a couple more seconds on that and then we'll close the poll. Thank you very much. I'm now going to hand over to Stuart, who will talk more about UK Export Finance.
Thank you very much, Alex, for that introduction. It's very interesting to see some of the figures coming in on the poll, clearly showing that a lot of our audience are currently involved in exporting. So I'm going to take a few minutes to introduce UK Export Finance, tell you something about where we've come from and what we're able to do for exporters in the UK. So I'll go over a little bit of history to set the context of how we've come to where we are today, some of the services and support that we can offer to UK exporters, and indeed some of the limitations on what we're legally obliged or able to help with. I'll expand upon our primary and secondary roles and elaborate on the direct financial support that we can offer, as well as the indirect advisory and signposting role that we have. So first of all, who are we? Well, many of you may have heard of the name of ECGD, which has been around for a very long time and was in fact created in 1919 as the first of the world's export credit agencies. We are the UK state export credit agency, and we are the best in the world. You don't have to take my word for that. We were voted the best export credit agency in a survey in 2014 by the magazine Global Trade Review. The poll was conducted amongst exporters across the UK. Our headquarters is in the Treasury, but we do report to the Trade Minister. For many years, ECGD only supported very high value transactions, very long-term credit, very typically for infrastructure projects such as roads and railways, dams, the sale of boats or airplanes. In 2011, UK Export Finance was established with a remit to specifically support SME businesses and MSB businesses with short-term trade finance and risk support in export sales. We are legally not allowed to compete with the market, but we support and complement the commercial providers. We operate within EU state rules and OECD Export Credit Agency rules. So my typical day consists of doing webinars like this, meeting with lending managers in banks, working closely with our colleagues at UKTI, the Chambers of Commerce, and other agencies that support SMEs in order to increase general awareness of what the government can do to drive up our export sales. I meet with other stakeholders such as accountancy firms, lawyers, export finance specialists, invoice finance companies, insurance brokers, some of the challenger banks and other parties for the same purpose. And I also meet with a considerable number of smaller SME exporting businesses, very often to address a specific export finance or risk issue. All of what I do is free of charge, so I'm an independent advisory service that can support your company. One plea I do make at this particular time is that I'm more involved in the strategic stage with businesses. When exporters are developing their new market export plans, as I can add value at that stage, it may mean that our products are not even needed. At the moment, I'm very often called in to try and retrieve a crisis. So who can we support? We are the UK Export Finance, so we can only support companies that have a registered presence in the UK. We can only support export sales, so we cannot support general working capital. But those goods may be tangible goods or services. It's not just about a container load of widgets. We support higher education, software design, architectural services and other design services and project management. We will look at any sector and any destination for goods. Because of our history with ECGD, we do have a reputation of only being interested in bigger companies, but this is no longer true. Recently, I've supported contracts with a value as low as £12,000. This is not exceptional anymore. Most of what I do is around relatively short-term contracts where the deal will be delivered and payments made in less than 2 years. However, there are exceptions. I'm also the route to the very long-term services offered by ECGD for projects. There must be some UK content to a contract of sale, but this can be as low as 20% by value, which can include profit margin as long as that's retained in the UK. In terms of eligibility, our own services are provided to businesses where there is a commercial contract between a UK domiciled company and an overseas domiciled company. As I've just said, there must be at least 20% UK content, but that can include service, design, engineering, project management elements, and indeed profit margin. We work very closely with other finance providers to try and find a solution to viable projects or contracts of sales. We very often add value to the deal by advising in the very early stage of negotiation of terms of trade and development of the trade cycle to ensure that the deal is going to work for all of the parties. First of all, the deal has got to be legal. We are a government agency, so we've got to ensure that any transactions are subject to sanctions and the destination of goods, the markets, the buyers and the product are perfectly legal. We can and do help startups and micro companies, but most of that is in the advisory capacity, as our products are mostly suited to companies that have been trading for 2 years or more and have a track record of successful sales. The company must be liquid. We are legally barred from providing government support to failing companies. And we prefer to see a trend towards profitability, and in this way our friends in the Treasury can tax the company in the future. We can only support export needs. Again, we are legally barred from assisting in general working capital at the moment, where they do not affect export success. However, the terms of the Small Business Act passed last year have extended our powers so that we are looking into supply chain finance, where the sale may be within the UK, but the ultimate destination of finished goods will be an export, and this will be coming in later this year. The primary role is to visit UK exporters and to try to achieve the government target of £1 trillion worth of export sales by 2020, and with a secondary target of 100,000 new exporters by the same time. As I've already said, we are completely free of charge at the point of delivery, and so we add a valuable resource for current exporters who are growing or to new exporters. It may sound rather strange to you, but I don't really want businesses to use our products, because the ideal solution is to find an answer in the existing commercial market. Where the commercial market cannot help the exporter, that is where we may be able to offer our own products. The deal must be viable, and we do carry out quite a lot of detailed analysis of the transaction to make sure that this is a deal that will go ahead. So going into some details of our products, the main things that we get involved with companies at the moment is around support for the issuance of overseas guarantees. We also provide export working capital scheme support. Bank guarantees are increasingly being asked for by overseas buyers as perception of seller and sovereign risk have increased since 2008. In addition, in a number of countries, exchange control regulations mean that if a buyer is to pay you in advance, in order to successfully apply for the hard currency, they're required by the central bank to ask for an advance payment guarantee. The rules around capital adequacy in Basel III now mean that your bank will often require the cash from an advance payment is held as collateral against the guarantee, which means that you cannot use the hard fought for advance in your working capital. Another problem with foreign bonds and guarantees is that they often drag out beyond their expiry date and so can unduly affect an exporter's bank facility requirements. Our export working capital support scheme is where your bank may want to support a new, larger than usual export transaction. But the demand for a pre-shipment loan, often to pay for materials or components, is just too much for the security available to them. So we can step in and, subject to our analysis of the transaction, offer to act as a guarantor to the bank for part of the debt. We are also a primary credit insurer. We can often insure in markets where the main credit insurers find it difficult to insure. We tend to be the last out of a difficult market and the first back in. We only withdrew cover for Libya in March of last year, long after the main credit insurers had withdrawn, and we have already started to look at providing cover for Iran. We are not allowed to compete with or distort the market. We can only offer cover where brokers cannot find a solution, or that solution may be so expensive that it is not a feasible transaction. We also do cover annual cover and single invoice cover. For the bigger transactions, typically longer-term projects, we can assist with supporting the buyer. If you're going out to negotiate a contract in one of these higher value projects, very often in some of the African countries or Middle Eastern countries, we can sometimes give you a letter of support stating that, subject to a contract being signed and acceptable due diligence, we as a government agency have interest in supporting the deal. If you're competing with suppliers from other countries, then they will probably have such government letters of support in their pockets. Although the details above indicate lower values, we find that the banks we engage with on these sorts of deals are most likely to be interested in deals in excess of £5 million. But if you have a project that is between £1 million and £5 million where the buyer may need help paying for the transaction, then do get in touch with me and we will be able to point you in the direction of other organisations that can help you. We're very easy to get hold of. You can access our bank schemes through your bank or getting in touch with me. There is no additional fee for our involvement in such transactions. There is a formal process, and I'm afraid that as it is a government scheme, these documents are quite lengthy. But we are working on putting our forms onto the internet and making it available for a direct application through our website. We provide insurance cover, mostly through insurance brokers, but you can get in touch with me directly. As I've said once before, we do not compete, so we would always ask you whether you've been in touch with an insurance broker and obtained quotes for the transaction. And finally, in the medium-term products, you can come directly to me, but your banks will have to be involved in the transaction. We have a marvellous website, and this is full of a lot of information, and in particular, you'll notice that you're able to check out our country cover policy. This doesn't only provide details of what cover we provide, it also gives you an indication of our government-based assessment of the risks of the countries that are concerned. It also gives you access to details of the export finance advisor in your area and terms of the services that we can provide to you. So that's the end of my presentation. If you do want to get in touch with me, my details are there. You'll see that I cover the counties of Berkshire, Hampshire, Surrey and the Isle of Wight, but I'll be able to get you in touch with my other colleagues elsewhere, should you want to talk to them about your export finance needs. And now I'm going to hand you over to my friend and colleague, Tim King from the FSE Group, who's going to talk to you about their services for your working capital and export needs.
Okay, hello everybody. Just to set the scene, in case you haven't heard of FSE, we're fund managers and we look after other people's money and use our experience to do so. We've been around for 14 years and we're authorised under the FCA, and the funds that I'm talking to you about today come from the Thames Valley Berkshire Local Enterprise Partnership, and they have put a fund with us of £7.25 million to help Berkshire businesses looking to grow and create jobs. And probably the most important thing I should like to say is that we're not competitive with the high street banks, but actually complementary. We can help perhaps alongside them or instead of them. And okay, what do we look for? We do a lot of due diligence on our prospects because we want them to succeed, and actually quite nicely we'd like to get repaid as well. So we need things like business plans, accounts and projections, but also we like to meet the management team and get to know them because their ability is just as important. A great team can make an average project actually succeed, whereas a poor team can spoil even the best idea. Okay, what we have and what dovetails in nicely with what we're talking about today, we have a number of offerings, but we have a trade finance loan scheme, and our aim is to make larger deals work where there's lots of upfront costs and for materials or staff, where actually the funds are not going to roll in until you've made that early investment. And whilst we are talking about export today, just as an aside, this fund actually can be used within the UK for big deals within the UK. And going and looking at the security that we take, it's fairly simple stuff. We take a debenture and we do take a director's guarantee. It's unsupported, and unlike the banks, we will take it for a portion of what we lend. We don't go for 100%, which is the expectation of most of the banks. And as I said, the fund that we've got from the TVB LEP is for Berkshire businesses, or at least some of the factories or an office in Berkshire. And we do only support limited companies, I'm afraid. Repayments for our trade finance loans, it really depends on how the cash flow works. It could be that the way the cash comes in, we'll take regular payments over the period of the loan between months 3 and 12, or it could be just a simple lump sum at the end. And I've said that our funds could be used to provide materials and staff, but also we can use that loan, or likely to use the loan, to provide cash cover for these advanced payment bonds that Stuart was talking about. So once that sits there as cash security against your advance payment, then that allows you to use that advance payment to get the deal going. And as a case study to someone that we have helped, we met Robert, to get this right, Hartshorn, and he used to play in bands when he was at university, and music was his first love. So when he came out of university, he did go out and get a job with BP, but he used that money to actually fund his interest in music. And in 1986, he set up a company called Ex Cantibus and Gaudium. I'm not 100% on the pronunciation. And basically that's Latin for enjoyment through melody. And over the years, he's built up a successful business composing. And he wanted some years ago to branch out, and especially into China. and he's benefited from a couple of loans from FSE to go out and do that. And when he got into China, he found that the Chinese government was very keen to have their own creative industry. And so his expansion plans were timed very well. And he got in with some investors, and there is a team out there that's there's a production company in Hong Kong that's been set up, and they have agreed investments of £16 million to get this project going to create a film in China that crosses over between China and the rest of the world. But Robert wanted to get this going and sort of get work in Berkshire going, not wishing to delay the project while the funding came in. So he came back to FSE, and we've provided him with this short-term trade finance loan, which is allowing him to get going and really sort of get himself known in China. So there we go. That's a bit of an example. And the application process, it's fairly straightforward. Application forms and that, but we're hopefully easy to do business with. We're lending someone else's money, so we do need to get close to the deal, and we do need to go to an independent credit committee, but we do look to support our clients. And finally, if you've got our contact details, if you've got any questions after this, use those to get in touch and let us know what your concerns are, and we'll do our best to answer them. So that's me done, and I'll now pass you over to Alex to talk about the top tips to consider when you're exporting.
Okay, thank you very much, Tim. I'm just going to spend the last few minutes of this webinar just running through our top 10 tips for successful exporting in 2016. As accountants and business advisors to many companies who do export, we see some very good successful businesses, but we also see where it doesn't necessarily work first time, and a number of these tips are derived from those experiences, and also, as you'd expect from accountants, from the legal and regulatory requirements that we understand and see in exporting companies. So the first one really is, sounds an obvious point, but it's often ignored in the excitement. It's research the market and have a good reason for wanting to sell there. Often, having perhaps developed a successful business in the UK, companies think, right, the next thing to do must be to go overseas, but they don't really research the particular markets properly, and therefore they don't succeed in doing that, at least to start with. It's very important to understand the market, the size of the opportunity, the key players, the competitors, potential partners, and excuse me, do that before going overseas. If it's important to do that in the UK, then it's even more important overseas because it will probably be more difficult. And like the UK, from that, it's important to develop a specific business plan for that market and use that plan to identify the potential issues and challenges. Secondly, focus on one place at a time. We see this time after time. It's all very exciting going to try and break into a new country, but we see businesses trying to do several countries at once. Whilst that might well be possible for some people, it does make it difficult because, as I mentioned, it often is harder to get established than in the home market, and without focusing on one place at a time, it's very difficult to have the focus and, very importantly, the time to spend on that marketplace. So the tip would be focus on one place at a time, pick your number one location, go there, focus on there before moving to the next location. Third point then is make sure the product or the service is suitable for selling in that market. It goes without saying again that that product does need to be suitable for that new market, brand names, etc., but there's countless examples of big international companies who have designed a product for one market and then found that that isn't transferable to another market, perhaps because the name of that product is actually quite a rude word in the language of that country. And obviously, if possible, it's a good idea to engineer the product or service for global appeal from day one, rather than having to change it later on. Fourth point then, know the market and understand the cultural differences. You must know the market to know how to do business there, and it's important to look into and understand those differences before launching in that marketplace. Not necessarily just related to the product, but the different business etiquettes that occur in that country, and understanding that things won't necessarily happen in the UK. For example, in many countries, it's quite common that you go and meet somebody and they say yes, that they're going to do some business with you, but actually in their mind they're not meaning yes at all. There's several different kinds of yes in that country. Point 5, hopefully goes without saying, and part of the point of today is speak to the people who can help and who've done it before. People like UKTI and UK Export Finance. Everyone makes mistakes. The good thing is not to make the same mistakes over again, and to learn, if possible, from other people's mistakes. Point 6, protect your IP. I think, again, this is something that's been documented quite widely in the press over the last few years, but it's important to check that all designs, trademarks, etc., domain names are registered and secure in the short and the long term, and do this before you start. The position is likely to be different from the UK, and just because you're protected at home doesn't necessarily mean that you're protected with your business overseas. And there is government guidance which is available to help you do that. Point 7, you need to decide how you're going to sell in that market. Now, it might be obvious because of the particular product or service that you're selling, but there's a number of different options. It might be that you do sell directly. You do it all yourself, but alternatively, you might do it through a different route. You might find an agent in that marketplace, or another route, perhaps you might find a joint venture partner, or you might license your product to that marketplace or to somebody in that marketplace. And it's important to think about the advantages and disadvantages of the various potential routes to market. Obviously, you might use a combination of a number of methods. Point 8, I told you we get on to the more accountancy type things. Consider the legal requirements in the marketplace. Again, it will be very different from the UK. Even countries that you think will be similar to the UK have little twists which will catch you if you're not aware of them. From the start, whether you're going to be registering a new company in that marketplace, or perhaps whether you need to set up a place of business in that marketplace or register an official branch, will be a key decision at the start. And it might be that you do one thing for a few years while you dip your toe in the market before moving on to perhaps a more formal company structure. VAT or sales tax, whatever it's called in a particular country, can very easily catch people out, even if they're only really dipping their toes into a particular market. Some countries require you to register for their equivalent of VAT if you make any sales at all in that market. And again, critically, employment issues. If you're going to be employing people in those markets, or sending people from the UK on a regular basis, or perhaps for a secondment for a period of months, then you do need to consider the particular employment issues in that market, and not just employing people, but the various tax issues that will arise. Even within Europe, even within very close neighbours like France, if you send somebody to work in France for a period of 6 months to a year, there are some very complex tax considerations to consider in respect of doing that, and if you don't sort that out up front, you can be left with a quite large liability as a result. Think about the wider financial considerations. Things like exchange rate risk. Is that going to be an issue for you? What do you do about it if it is an issue for you? Payment of debts. It's hard enough sometimes collecting debts in the UK. If the people are many thousand miles away and in a time zone which makes it difficult to call them from the UK, how are you going to collect those debts if they don't pay? As we've heard earlier, how are you going to finance the particular expansion or the particular activities that you're talking about? Is that going to be done from your existing finance resources, or are there other opportunities that are available to you? And then things like export licenses and other documentation. And I think the final point really is be patient. It will take time to get established. The market will be different, and you will not necessarily have immediate success in that market. But hopefully, if you've planned properly, then it will probably work. So thank you very much for listening. I'm now going to hand back to Stuart, who is going to summarise the issues that we've been talking about today.
Thank you very much, Alex, and thank you, Tim, also for your presentation. When we started this presentation, we did ask you a question. We asked how many of you were currently exporting, and we got some figures back showing that over 78% of you are currently exporting or intend to export in the next year or so. We'd like to ask you another question about what one thing would help you to significantly increase your exports. So it's a multiple choice. We've been giving you a few answers there. If you'd like to respond to that now on the screen, that would be very helpful to us to understand what really matters to you at the moment. One of you has sent in a question about copies of the slides. We will make those available to everybody who's signed in today so that you can have more information about what we're able to do for you. A number of you have been asking questions as we've been holding this webinar, so I'd just like to put some of those questions out there to my colleagues. One of you has asked, which countries should my business focus on? So I'll put that out to Tim and to Alex for their own opinion about which are the primary countries to focus on right now.
Cool. Thank you for that one, Stuart. Sorry, I leant back there. I suppose it's a difficult one. It's what works for you, I suppose, in terms of depending upon your product and how easy it is to get it to where it needs to be. I mean, if you've got big machinery, you don't want to be transporting it by aeroplane and things like that. So it's a difficult question, but I would have thought that mainly Europe would suit people and the USA because of the language problems. It's a really open question.
I think from our point of view, it does obviously depend on the nature of the product or the service. What we find is that clients either, certainly if it's their first experience of exporting, either they go to a European country where they sort of feel comfortable because they're sort of a familiar Western European country, so France, Spain, Germany are very common, or they go somewhere where the language barrier isn't an issue. So Republic of Ireland is often a key one, the USA, and then countries like India, where we to an extent have a common heritage, a common language, and that assists people in sort of getting into that marketplace.
Thanks very much, Alex and Tim. Just to add a little bit to that, before I came here today, I had a quick look at the HMRC website, which very clearly indicates that our main places for export are still the EU, with Germany and the Netherlands quite clearly our main markets there. But it's very interesting that China is rapidly growing as a primary market, as indeed are other non-EU destinations. We just got the results in from the poll, which show that 32% of you would like to have introductions to new buyers overseas, and I very strongly recommend that you go and have a look at the UKTI website. I again looked on that this morning, and as at 9 o'clock this morning, there were 1,787 new opportunities available to users of that website. So do go and have a look at the UKTI website. Another 16% of you asked for support to visit new markets. And again, I do refer you to my colleagues at UKTI, who provide a marvellous service for new market access, visits to markets, trade delegations, inward delegations as well. So do please talk to UKTI. Other great place to go to support for visiting new markets, your chambers of commerce. And I know we've got one or two people from our local chambers of commerce listening today, and I can strongly promote their services in helping access to those markets. The third thing that people are looking for is easier access to finance, and you have two people here today who would be really happy to hear your calls about access to finance for export sales. So do please get in touch with us. We've got a couple of questions coming up here now about the EU and the possibility of a Brexit. Somebody has asked here, does anyone on the panel have strong views for either yes or no exiting EU? And another question, what will leaving the EU do to SMEs as we have trade agreements and when it was a common market? So over to you guys, what are your views on the Brexit?
I think I didn't bring my crystal ball with me today, unfortunately. So I think it's in terms of what will happen, it's too early to know. Clearly, if we left, there would be new territory, but I think certainly at this stage, it's not really possible to comment further on that.
I totally agree. You can read the newspaper, and there are comments from very worthwhile individuals, fund managers, and they can't make their mind up. They're arguing to leave and arguing to stay, and I don't think anybody's absolutely clear. So a difficult call.
Well, I'll just refer back to some of the statistics I derived from the HMRC website this morning, where of our total trade in December 2015, or our year-to-date trade in 2015, £305 billion worth of trade was made through 2015, of which the EU was 133 billion. So it's a very important part of our UK export sales. Whatever happens, whether we stay in or go out, Europe must be a primary destination for our sales. So we've got to keep it in our headlights as a place we've got to be selling to. So thank you very much to Tim, and thank you very much to Alex for our opportunity to talk to you today. Thank you all very much for listening to us today. We've had a very good audience participation. There have been a number of other questions that have come in, but I'm afraid we don't have time to answer those right now. So we will take those questions offline and get back to you, each and every one of you. So your questions will be answered by us. I particularly want to thank James Cooper Preston for offering us the opportunity to hold this webinar today, and particularly to Alex, who's hosted this event for us. I want to make special mention of Lizzie, who's sitting in the office here today, doing a fantastic job getting the technology working and posting the questions to you all today. So thank you all very much. I hope it's been useful. If you want to get in touch with us, you have our details. Slides will be sent to you, and we'll endeavour to answer all of your questions that you sent to us. Thank you all.